All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. So let's get into it this week here. So we did have a long 3-day weekend in the markets for the President's Day holiday. Futures were open today. I'm doing this video on Monday. Futures were open, obviously just a nothing burger as per usual. So you can see, look at that tight range there on the ES. Nothing going on there. So that is totally normal to see that low participation on a Monday. And it's usually a throwaway day there. I think they just keep the market open just so they can get their fees. But in any case, we did have Options X last week. So a lot of whipsaw. We had a little bit of selling. Early in the week, you can see here on the ES, we'll go back to the SPX, you can see here on Tuesday, pretty good little dump, 1-day dump. And this was off of the back of CPI. So CPI came back in hotter than expected, and it was something that threw the market for a little bit of a loop. So the market was not expecting this, and then PPI came out on Friday, and that was hot as well. So that really essentially kind of confirmed what we were seeing with CPI. If we take a look at yields here, the 10-year started to break back up this week. I've been talking about this. I'm looking for a low in yields, late last quarter. And, I've been saying we should trade up into in quarter one. And that is the case. We are now above that critical 4.2 level. So yields are starting to push back up here. Heck, even dollar yen starting to push back up towards 152. So if that gets exceeded, we could see maybe some threshold breaking. Maybe the BOJ has to step in here. So definitely some things going on the inflation front. Oil continued to kind of inch higher this week. So definitely seeing hotter numbers here. The market's been able to hold up though. And again, there's lots of index pinning, OPEX, things of that nature. When you go into an OPEX week, a lot of the time the market can remain pinned even if there is volatility. And we saw, things get quickly, I think a lot of people are looking for a top here. A lot of people know how extended the market is and extended some of these certain names are. And you see a lot of puts come into the system very quickly when we get bad data. And that does cause us to reflex back up sometimes. So bottom line, though, right now, market is a little stretched, and it has been for a while. But from a technical standpoint, this thing can still go higher. So that definitely needs to be respected until we get a signal here. And I'm going to throw my trend lines back on. You're going to see here, you do have a bit of a rising wedge, the blue trend lines there. If this lower trend line gets broken, specifically on volume, I think you'd have some type of an interim top in place, maybe a longer top. But that's really all it comes down to. If the market's holding up and it's holding these technical levels and continuing to put in higher lows, then we have to respect the market here in the near term, and it can go higher. That said, let's get to the big story last week. So, this is one of the wildest things that I've seen in a while. And take a look at SMCI here. Everybody's going to be talking about this, but I'll say it. I told this to my members. I told this on my channel. I said, I don't think I've seen an engulfing candle that big before. This was at one point on Friday, it was up at 1077. Within 25 minutes, it had dropped 220 points. And I said this previously. I said, when this thing tops out, it's going to drop 100 points or more in a day. And that has certainly happened here. And, you can't make this up, how this stuff tends to work out. But look at the date here. We're definitely in bubble territory. That's for sure. February 15th. Right there, and the date Friday was the 16th. Also, shout out to Jared. He did a little mini thread on SMCI and the volatility skew. If you're unfamiliar with with me going through this, I know it's too long for me to read for this video, but essentially the vol structure in SMCI is very similar to GME, and he did this exactly on Thursday too. So that was the 15th, and essentially what the long and short of it is, at some point when you go parabolic like this, implied volatility, I think he said at one point throughout the rest of the year was a 5% implied volatility for each day. So obviously that's insanely unsustainable for any stock to have a 5% implied volatility for every day. And once that volatility declines, realized volatility, meaning once the stock just simply levels off, it's going to be way too expensive for market makers to hold those hedges, and this is what's going to happen, right? This is what we see. Take a look at the weekly. Wow. Look at that topping candle. Massive tail, shooting star on record volume. So this stock may have topped out for quite a while here. Definitely for the foreseeable future. Doesn't mean it won't get bounces. It's going to want to go to tag that 20 moving average at some point here. And possibly, could put in a higher low, but this is, this was definitely one for the books. Another one that was getting squeezed up like crazy is ARM. And this one is one that Masa-san has his hands all in, and I've been talking about this, and even with SMCI, this is SoftBank. Like, this is gamma squeezing. There's no organic buying going on in SMCI or ARM. And how do I know that? Well, take a look. SoftBank owns, that's right, 91% of the shares. So only 5% of the shares are available to trade, which I don't even know how that's legal, but I don't think the SEC cares. But in any case, just wild action here. Now, getting onto this week, obviously it doesn't really need to be said, but Nvidia earnings will be the Super Bowl for the market. Jensen better deliver. I mean, if we're seeing what we just saw in SMCI, obviously Nvidia is too big of a company for it to be down that much in one day. But then again, Meta was up 20% in one day in about a half an hour. So maybe. But my point is that Nvidia now is the third largest company in the NASDAQ 100. Yes, that's right. It's bigger than Amazon and Google now. And it's $1.8 trillion. So if there is any sort of miss with this AI chip demand, if Nvidia goes back to 500, which, you'd say, well, that's like a 30% move. How are you calling for a 30% drop? Well, I'm not saying it's going to drop 30% on earnings, but if it does make a move back to that handle, which it was at literally not even 2 months ago, that's going to be a huge weigh down on the market, right? It's very much like what Tesla did in 2021 when Tesla got so big and it dropped, I think 50 or 60% from peak to trough. It brought the whole market kind of with it. And by the way, look at Toyota here. They're at an all-time high, and Tesla is well off the all-time high. So again, there's going to be competition with Nvidia. Does it happen this quarter? Maybe not. Maybe the market looks at it ahead of time and starts pricing that in. But these AI chips, they're going to be everywhere in a few years. So I mean, Nvidia is a great company. How do you think I'm making this video right now? I've got Nvidia cards in my computer, of course. But at some point, that competition will catch up, and it will, even if it only eats a small portion of that margin. The valuation is gonna have to come in, but in any case, Nvidia is still holding up. I believe though Druck is making some moves here. I don't believe he's necessarily sold Nvidia yet. He has trimmed Google and Amazon and Broadcom too, so another chip maker, and he's actually picked up some gold. So Barrick and Newmont. He's previously called Nvidia basically in the nosebleeds, I think was the actual quote. I'm not sure if he actually dumped any Nvidia up here, but again, it's the AI bubble right now, and again, Nvidia is going to be make or break for the whole market. It really is that kind of stock now. It's $1.8 trillion. So if this does have any sort of hiccup, it's going to be a huge problem for the market here. But again, like I've been saying, until the market breaks breaks this pattern of higher lows. Higher low, higher low, higher low. The market can still hold up. But obviously, Nvidia will be the fulcrum this week. You can see the rising wedge there. Same thing on the Qs. And a break of this trend line on volume would tell me that we're likely in corrective mode. Russell 2000 this week was very interesting all over the map. We had a big sell on Tuesday, and then nice rebound into Wednesday, Thursday, and then we kind of backed off Friday. I think the Russell's hanging in there okay. And I think if this market, especially if Nvidia does come in and tops out and Mag 7 tops out, you're going to need, if this market's going to continue to rally, it's going to need rotation. So watch for IWM, watch for ARKK. So ARK, watch for XBI, biotech. If those three sectors can start to pick up and see some money flow as Mag 7, rotates out, then the market could hold up. Now, if Nvidia comes down into selling off, 2, 3, 4, 5% in a day, it doesn't matter how much the IWM is up. The market will be down, but this will lessen the blow, and it tells us that at some point we would look for weekly higher lows in the market if these kind of growth names and growth sectors start to see rotation. At some point we would look for higher lows or monthly higher lows there. So just be aware of that. But IWM having an okay week and no real problems with it, but still hammering on that 205 level. The Dow here There's still a little bit of psychological resistance at 390, but overall no problems here with the DIA, and it was fine. Just kind of a sideways week for the most part. Semiconductors, obviously, again, like I said, the fulcrum of the market. Watching that rising wedge there as well on the SMH. If that breaks on volume, that's a big negative for the market. IGV never got to double top. So look how close it got. Got all the way up to, so we had 448.79 up here, and we got close, got to 444.09. I wouldn't rule out a tag of that level. It's very close. Usually when you get to those levels, you want to at least test it and pierce it. But that did not happen this week. If we break below 420, that would do a little bit of chart damage. So, we would kind of lose this like higher low structure here. But right now it's holding up okay. And again, we'll leave it there for the most part. If the market holds up, this will hold up. Dow Transport's actually had a little bit of a weaker overall week. You can see on the weekly time frame, almost an engulfing candle there. However, you're still well inside of this green bar, and you're still above, 15.6. So it's not the end of the world, but definitely not great price action for the DJT this week. If this continues to firm up, though, it can work its way back to 16.6 and then 17,000. I would not want to see a weekly close below 15.2. That would be a huge, huge, huge red flag for the transports. But right now, they seem to be holding up just fine. All right, interest rates here. So flip over. All right, so there's the 2-year. Again, I talked about the TNX briefly, but we blew through that 4.5 area. I told you guys there's an inverse head and shoulder here to 4.7, and that's where we went on Friday. So we went right there. That doesn't mean we can't go higher if this consolidates here. This can shoot through that, and then it can work its way back towards, believe it or not, 5%. If that happens, it's going to be very interesting because the Fed funds rate is predicated on the 2-year yield. And if the 2-year yield's at 5%, how's the Fed going to cut? How is the Fed going to cut? If the effective Fed funds rate is 5.33 and they cut 0.25%, well, you're basically at parity right there. If they cut 0.5%, that means the 2-year yield's ahead of the Fed funds rate. So I don't see how that could be a thing. And again, the market doesn't seem to care. The market doesn't seem to think that this is going to happen. But again, looking at oil, it's firming up, and I think CPI is going to be hot again next month. We'll see how that plays. Barring some type of geopolitical, I know they're gonna try and knock it down. It's an election year, but just some things to consider there. Here's the 5-year. Again, much firmer. If it consolidates, it's going to 4.5, 4.6. 10-year, if this consolidates, it's going to 4.45 and then 4.6. And the 30-year, if this consolidates, it's going to 4.65 and then 4.75. So those are the levels I've got worked out for yields, and I do think they will get hit. At least currently, that's kind of what I've got projected out here. XHB, so that held up fine this week. It was a red week, but no real problems. It came off the lows. This can still go higher. VNQ also got saved by the end of the week. On Tuesday, we were below that green bar low on the weekly, and then we closed back above. So that's a positive for VNQ. So this can still hold up. I don't know what's going to go on with commercial real estate. I know there's lots of headwinds possibly coming up soon. BTFP is set to run out in a month, and reverse repo is set to run out in a month. But we'll see how that plays out. Again, right now the market's not showing that it's too bothered, but we'll see when we get there. XLF had a good week. I believe there was news out of Wells. I'm not sure what that was, but it did get a nice pop on Thursday, and that did help out the banks there. I think XLF still wants to test 40. KRE still holding up, but definitely on the weaker side. I definitely think that the regionals are a little vulnerable here. KBE large bank is in a little bit better shape, but still, we'll see. It's kind of touch and go right now with the banks. The broker dealers are holding up though. New all-time high, new all-time closing high for XBT. So oil, we already touched on a little bit. Remember we had this, I know there's a lot of lines here, but that's just how I have it set up. But there was this, was it right here? Yeah. So this was your inverse head and shoulder pattern right here. And there's actually kind of another one developing, and it's bigger. And if that plays out, it's a lot bigger. So I don't know if this would happen during an election year, but That's kind of where the target would be, right in that 90, 91 handle. It has not triggered yet, so we're not even going to really entertain it, but it's something to keep an eye on. If it does trigger, then, could indicate higher oil prices. Right now, I'm just giving oil the upside bias we'll just say 81.50 to 82. That's kind of all I'm seeing right now. If this does come down and we break this trend line, then I think it's more vulnerable. But right now, it's holding up okay. If that pattern triggers, though, it could send oil a lot higher. The Fed's definitely not going to cut if that happens. But oil with a decent week, XLE with a nice week as well. Look at that outside move. We talked about this. If this firms up and it gets a pop, it's going to be in good shape. XOP broke out of our wedge as well. So oil services, oil gas exploration looking a lot better. And my favorite, the OIH, also having a nice pop. Just got to break this trend line, and then this can start making higher highs. So I do like the energy stocks here, and I think they're acting well right now. CCJ, that's still holding up. It's testing this low though, so we did spike that low, and for what it's worth, that's the first time we've had weekly lower lows in the last couple years. So technically, I guess technically you could say 41.17 was your pivot low. We never got there, but either way, it's getting close. It does look a little top heavy up here. The URNM looks fine though. That still looks really strong here on the weekly. It just needs to consolidate, but the trend is up nicely, and I don't see any problems here with URNM. Nat gas continuing to dump again. More Freeport closure. There's I guess warmer than expected winter. I don't really think weather has a lot to do with it. Right now, I think a lot of it is just a lot of short selling, especially when you get news like partial closures and like export ban. But we're right now, I think 10 points, 11 points off the all-time low for the futures, which is insane to think about, because the last time we were there, 40% of the world was shutting down from COVID. So just insane price action here for nat gas. I think like I've been saying, it is really attractive. And I mean really attractive, because when this bounces, a bounce for nat gas is like 40%. A retrace for nat gas is like 60, 70%. And as you can see, even just right here, this was a 50% move. It doesn't look like it. It's a 50% move from here to here. And we're down a lot more from here to here than we are from here to down here. So in any case, you can see though, historically, when we get down to $1, sub $2, you start to have like massive rallies. Even right here led to $1.50 to $10. I don't know if we're going to go that high right away, but it is very attractive. I just don't have quite like a buy signal yet. I need to see massive seller exhaustion or something of that nature, or a reversal candle, and then we can start looking at a low for nat gas prices. But right now, still languishing there. It looks insanely attractive, but you got to let the market kind of tell you where, when you can miss the first 2-3%. If it's going to rally 50 to 100%, I don't mind missing the first 2 to 3%, and knowing that I've got the low in. But nat gas still down. Again, I'm keeping a close eye on that. Dollar index backed off on Friday, but again, had a nice pop with yields. Again, if this consolidates, it's going to 106, and then maybe 107. Where it would be concerning on the downside for the DXY is if we broke 103.50. Gold here held up reasonably well, even despite yields, breaking out. We'll see. Again, it's also the dollar too. If the dollar starts to inch up, it's going to put pressure on gold. But gold's holding up. I'm very impressed with gold. The fact that yields are above that 4.2 level that I talked about last couple of weeks. I said if we break above 4.2 on the 10-year, I'm very interested to see if gold have a panic, like the investors start to panic down. But it's holding up. So no real problems here. It's definitely, I still think it's going to be under pressure while yields are rising. But right now it's hanging in there okay. The bigger time frames are bullish. The daily chart is neutral right now. Silver, same thing. Silver had a nice little 3-bar pop last week. It did come in today. So this is Monday price action right here. And a little bit of a dump, which is unusual for a holiday. So a little bit of a retrace there for silver. I still think I'm still kind of in the camp it wants to come down and test this level again. But you know what? It's holding up right now. And we'll leave it at that for now. Platinum Had a decent week last week, and so did palladium. Nice outside move there. Copper also retracing. So we had that little break that negated that head and shoulders by closing back above. Again, I'm going to give this the upside bias to around 390 right now. So Bitcoin broke out a bit last week. And again, I've been saying in here each week that the weekly time frame is perfectly fine. And that has been the case. And it's into that 52 handle. I do think it does need to stall out here at 52K. But again, no real problems with Bitcoin. And that is acting really well right now. It's doing everything it should. It's hitting resistance, and it's not rejecting. It's just going sideways. That is good for continuation higher. And Bitcoin looks pretty good here. Again, lastly, Nvidia earnings Wednesday afternoon. That's going to be the big mover. But markets can go higher as long as, we continue making these higher low here. We break this rising wedge pattern on volume, then I think you have at least a medium-term top in place. But until then, let the markets tell us what to do. Let's not try to front run anything. And again, still definitely seeing a lot of bubblicious things, but these things can go higher, and you need to let the market tell us when it's ready to move before we start calling tops and doing anything else like that. So anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on ConoverTrades.com. Talk to you guys all next week.